Welcome back to Everything Money. In this video, we will update you on Disney as a company and its stock. We'll use our software to show you the financials behind Disney and what you should be paying for the stock moving forward using our stock analyzer tool. Mo will show you the charts and trends if you want to trade Disney at a quicker pace and make money on these swings. But first, why should you watch this video? I bring your questions about Disney, where they're headed and where they're going, to a couple guys who own and operate over $100 million in real estate, multiple businesses, and stock. And they'll guide us and help us with our mindset as we think about maybe investing in a company like Disney. Paul, what do you think?
All right, guys, follow us on Everything Money Investing, our new Instagram account, and then follow our 3 personal accounts. I do very, very little about investing. However, Pabrai, have a great picture with him. That interview has already come out. It's an awesome video. Go watch it. So, Disney stock. This is our Everything Money software. More on that later. But this is our 8 pillars tool. So we're going to go to the exclusive 8 pillars tool. Type in Disney. Is that with a Q? All right, guys. So look at this 1-year chart on Disney. Look at this. 201 peak, 203, and 142 low. That's incredible. Look at the 5-year chart. Oh my gosh. 10-year chart. You could have bought Disney. Okay. And Disney's had a lot of excitement. What was that, Mo?
November 10th, just over a month ago, was at $175 a share.
Now it's at
$150.
Oh, was it? Is it?
Yeah.
Oh, 150. You're right.
Yeah.
All right. So, guys, Disney is a $275 billion company. Pillar number 1, we want the 5-year PE ratio to be under 22.5. It is 43. That's an X. This means it's selling for 43 times the profit of the average profit of the last 5 years. Okay, pillar number 2, we want the 5-year return on invested capital to be greater than 9%. It is 3%. That's another X. They don't do a good job of reinvesting their capital in their business. Look at their cash flow over the last 5 years versus last year. Last 5 years, they've averaged $5 billion. Last year was $2 billion. Remember, COVID shut them down. How many parks do they have in the world? 3 or 4 parks? Major parks, all shut down. And that was accounting for what percent of their revenue?
40?
40%. Now, they did come out with Disney Plus. Disney Plus skyrocketed. They went, how many users do they have? Over 100 million users now?
Over
Disney
100 million.
118.
I guess the question
118 million.
I guess the question with my take on Disney Plus is, you saw the skyrocket in all streaming services, and now they've all started to come down. Is this included in it?
And guess what? There's going to be consolidation in streaming.
Yeah.
In comparison, Netflix has 214 million subscribers.
Okay.
Double, basically.
Wow.
So.
Yeah, but I'm surprised Disney just came out with Disney Plus
did it very quickly.
in the last 2 years.
Netflix has been around for a long, long time.
Netflix has been around since the 90s when they were giving DVDs.
So the great thing that Disney did is, right when they came out, they basically gave it for free to like Verizon users or something. So that just instantly put it in everybody's hands. It's a great move.
All right. Pillar number 3, we want income growth, revenue growth over the last 5 years. So we go to our income statement, our exclusive software, scroll down, 55 billion to 67 billion, check mark. Now, keep in mind, guys, there was some revenue falling here, but remember, COVID happened. I would not be as concerned about this. We want to look at this as a company going forward. I'm not as concerned about the recent drop and then rebound. Pillar number 4, we want net income growth over the last 5 years. So we go to the net income portion of our income statement, 9 billion down to 2 billion.
Uh-oh.
Yeah, again, though, why is that?
Got time for that.
COVID, of course.
Yes, COVID. They had to make a ton of money off their parks, off everything. So, again, not worried about it, even though it's an X. Pillar number 5, shares outstanding. Guys, we want shares going down. If they're going up, they're diluting you as an owner. You're getting a smaller piece of the company by keeping your shares. This is not good for investors. So we go to 5 years ago, 1.54 billion, and now 1.82. That's an X. So it looks like they did it sometime in 2019. They issued a lot of shares. Don't know why. Maybe they made an acquisition. We have no idea. But we can find out from our cash flow statement. All right. Seth, explain to me pillar number 6.
Yeah, pillar number 6 involves their debt. We're going to take their total current liabilities and divide it by their 5-year free cash flow average. And we want this number under 5. So can they pay off their debts, or they have too much debt, Paul?
So first off, we want total long-term liabilities.
What did I say? Total short-term?
Current liabilities.
Did you see how confident I was, Paul?
You were extreme. It made me second guess. Like, wait, did you say that right?
And that's my point. Had you not corrected me, the confidence just can overwin. I mean,
listen, if you don't know it, fake it, right?
You see, I'm doing it live for you, the
well,
viewer.
By the way, it takes me to a certain point here. This is something I discuss whenever I meet a financial advisor and I hear them using big words, like
Sounds
trying to sound
great.
fancy.
Yes.
I remember once being pitched by somebody about insurance and they used the word depreciation. And I said to him, what the F does depreciation have to do with insurance? And literally stone cold. Darnell was there and he was just like, that was bad. And I was like, yeah. But this is a very common theme among salespeople. So be considerate of this when you meet people using big fancy words. I don't use big fancy words. And when I do, I explain them because I know what I'm talking about.
That's very punctilious of you, Paul.
It's not even a word.
It's from Nate.
What's it from?
It's from Kingpin. Go ahead.
Oh,
We
I
just
don't remember
watched
that.
Go ahead.
All right. So what we do is we go to the main page of our Everything Money software. The 5-year average free cash flow is 5.17. I multiply that number by 5 and I get $25.7 billion. So we want their long-term liabilities to be under 25.7. Now, keep in mind, guys, their free cash flow is down a lot over the last 5 years. So it's going to affect that. So we go up to the balance sheet, scroll to the total long-term liabilities.
Thank you.
$79 billion. Massive X.
Yeah,
Okay.
boy.
Numero siete.
Free cash flow growth, Paul.
Guys, free cash flow is cash from operations less your capital expenditures. You can use that to do one of 5 things. Buy back shares, pay down debt, make acquisitions, invest back in yourself, and pay dividends. This is the lifeblood of the company. So, cash from operations less your capital expenditures. Uncle Paul and crew added this line here to make the calculation easy for you. 8.7 billion down to 2 billion. That's the next. But look at the last 5 years, Sethi. They went from 9 to $10 billion in free cash flow. They haven't even done that in the last 3 years combined.
I wonder why.
The vid. So keep that in mind when you're doing this. Final metric. We want to come up with some sort of market cap for the company to look at. So we take the 5-year average free cash flow, we multiply it by 20. That's $103 billion. The current market cap is
274.
274 billion. That's a massive X. Now, guys, keep in mind, again, cash flow is down a lot because of COVID. So this is going to be heavily skewed. I do think the average should be around 10 billion, which would make it closer to the number, but we don't know. So so here's the 8 pillars tab of our software that does all this work for you. Look at all these X's, Seth.
Yeah, boy, it looks ugly. Oh my gosh.
It's so ugly. Listen, again, COVID hit it. Just like if COVID helped the company a lot, I wouldn't factor that in there. I'm not going to factor that in here. What I'm going to do now, I'm going to go to our stock analyzer tool. This is one of the most important parts of our software that people love. Every investment's the present value of all future cash flow. We don't know the future, so we have to make assumptions based on that. That's what stock analyzer tool allows us to do. So, the assumptions. Do we think Disney's been around for 10 years? Answer is yes.
Mm-hmm.
Revenue growth numbers. Mosef, bring it to me.
2, 3, 4.
Okay.
We did it last time. Yep.
Okay.
2, 3, 4. Good job.
Profit margin.
I think it's going to probably stay the same, around 12.3% on the high side. So
Let's go 10.5, 11.5, 12.5.
perfect.
Because I do think it's possible it goes higher with
Disney
streaming.
Plus, yeah,
So let's actually go a little bit higher on. Let's go 11, 12, 13. What do you think about that?
that's fine. The only reason I
Well,
wouldn't
Mo, look at
is
this.
because
This last 5 years was affected a lot by COVID.
COVID, of course.
So I don't think this 10 is a reasonable number. I do think it should be 11, 12, 13. Mo, what do you want to do here?
Should we go the same or should we go less?
If we go less, I say it's like 10, 11, 12.
Yeah,
it's not much less.
Wow, you guys did 8 and 10 last time.
Jinx.
Wait, what? 8 and 10 what?
On a profit, free cash flow margin.
Where did we go?
Now, I didn't factor in the drop recently in the 5-year thing as much
Yeah,
as I should
because
have.
it is probably $25 lower than when we did that last video.
Okay.
Somewhere in that realm.
Well,
ahead.
it's not about the stock price. It's about the revenue. I didn't factor in the drop. In this 5-year number, I think is skewed low on all of these things because of COVID.
Okay.
Now, I'm okay with revenue growth being low because it's still a large company.
It's big.
So we'll see. All right, PE.
14, 16, 18. I could even see you going lower than that.
Nope, I like it because it's a great brand. Talk about a moat, right?
Yeah, it is a moat.
I could even see a justifiable higher, but we'll see. So 12.5% return, guys, and the reason being is you can buy an ETF and get 9 or 10%. So if you want this, you want a margin of safety, put in 12.5%. Hit the analyze button. Oh boy,
What do we got on the
a
high
low
side?
of 45, a high of 70, 75, a mid of 50 to 60. So really, in the end of the day, I'm paying attention to it under 80. Because I do think to myself,
And
I'm only going to pay premium for Disney. I really am. I think to myself, Disney is the company I want to pay premium for.
For those of you that don't know, back when COVID was happening, we were looking at this and we were saying under $80 to $85 when we were starting to look.
Paul,
So it's
why do
very
we
consistent with a year and a half?
why do we keep doing videos of companies that are severely overpriced? What's the take-home
That's not
message?
us doing that. It's the market doing that. The market's just it's insane right now. The valuations are crazy. People want to pay everything in the world for things. And that's fine by me. Your job is to watch, as Warren Buffett says, unlimited pitches. Just keep watching the pitches come by you until the perfect one comes. Then you crank it out of the park. That's it.
Show us this. We just did the stock analyzer tool. Great.
We did.
If you want the software behind Paul, you can have it right now. He'll tell you how. Go ahead, Paul.
The reason we created the software was exactly for this, because people watch the videos, want to do their own analysis when they see me do this. So we created the software so people could do this. You get everything you see here on the Everything Money channel, on the Everything Money page, all our tools, plus all the ones coming up. You get over 30 years of financial data. You get access to Seth Moe and I. You get all the 8-pillar analysis, that stock analyzer tool, real estate calculator, retirement calculator, 8-pillar portfolio. We can put in 50 stocks at once. It tells you how they all look as a portfolio. All of this plus exclusive daily content. We have 1, 2, 3 videos a day that we release only to our users of our software. You get it all in mobile form. All of this is available on your mobile app, all for only 90 cents per day. 90 cents per day. If you can increase your returns or decrease your losses by 1 or 2% a year, that could lead to hundreds of thousands, even millions of dollars in extra net worth for only 90 cents a day. 2 ways to sign up, everythingmoney.com or Patreon. The benefit of everythingmoney.com directly is you don't pay sales tax yet because we're not big enough. So sign up, only 90 cents a day. This is a no-brainer, less than a cup of coffee.
And if you want to trade Disney at a quicker pace, join the Bid and Ask Nation, that glorious Bid and Ask Nation. Mo is your leader. He will guide you to daily trades, daily videos. Go ahead, Mo. Tell them what's going on over there. Look at Disney.
Yeah, so it's come down through the sweet spot. It's kind of a dog stock now. This is one of those. I've said this about PayPal, and I'll say this about Disney. If you want to put an expensive tracker share that's buying one share and seeing it in your portfolio every day, this one might be worth spending $150 on. And excuse me, seeing it pop into the sweet spot up here. The great news is you have this big gap to fill. This happened on their last earnings report. So I would just wait until this thing comes in here. I can guarantee you that we're going to get into this thing at some point as a Bid and Ask Nation because this is a great looking stock. Let's see the difficulty that it's going to have. So this is your daily chart, a little more detail. You notice that past 10 sessions, there's been pretty bad volume. You are in a downtrend, and you have to get through 4 major moving averages, and this is proven multiple days in a row that it cannot break above this 25-day moving average, which is that purple line. So you're having a struggle. You need volume. Volume is what drives stock prices. And let's come over here to a 15-minute chart. So Disney is not a stock that moves a lot of percentage points per day. And that's what you want to find when you're day trading. So I would not look at this one from a day trading perspective. I would stick to this more from a swing trading or long term. When you're looking for something to day trade, you're going to want that little volatility in there each day. So come and join us. Join me in the Bid and Ask Nation. Paul and I are going to go through and we're going to start day trading together live. That's when you'll get to see that more of that day trading aspect. So come and join Bid and Ask Nation. You get the Trading 101 series, which is all the rules that you need to be a day trader, long-term trader, and swing trader. The Employed Trader series, which is 6 stocks that I go through every day and update you on. You can just follow along with me. My exclusive monthly Saturday seminars that I do once a month, open Q&A to the Bid and Ask Nation, and the Discord community of 950 plus people. Come and join us and you'll be successful.
That's our take on Disney. We'll certainly update you as the year progresses and next year. Exciting new year for Everything Money, Paul, as 2021 approaches.
It is.
If you're in the community, I'm sure you love it. Grab the software, and we'll keep you posted with those below videos. Thanks for watching. We appreciate your support all around the world. Fondle the thumbs up on the way out, as you know I love. And we'll see you next video.